Ladies and gentlemen, we are live, and the reason we are live today is because AMD stock is going vertical. We are seeing AMD stock up today somewhere between 7 and 10%. Meanwhile, the rest of the market is in a bloodbath. And the reason AMD stock is doing so well today is because they had their investor day yesterday, in which Lisa Su, a CEO who is notorious for sandbagging, has given some pretty wild predictions about her expectations for AMD's growth over the next 3 to 5 years. Some of the highlights, which you might have seen circulating around today, if you are this way inclined, is AMD is expecting to see revenue growth of 35% year over year for the next 3 to 5 years. They are also expecting their AI data center revenue to be growing at 80% year over year for the next 3 to 5 years, hitting tens of billions of dollars. And they're also expecting EPS to hit $20 per share over the course of the next 3 to 5 years as well. So think about that, EPS of $20 per share. A 30 PE is a $600 company. A 50 PE is a $1,000 company, which is approximately a 4x of where we are now. Lisa has just been on CNBC. So let's check out this interview, which she's just done, and I'll give my reactions along the way.
Now is the AMD CEO, Lisa Su. A note on this, AMD stock up phenomenally. You can see since she took over, 589%. Lisa, I think when you took over, this was a $2 billion market cap. I think today it's above $386 billion. Congratulations.
Thank you. Who's counting?
Well, it's great to be here with you guys this morning.
It's great to see you, too. Last week, you had earnings that came out that beat all expectations, and yet the stock actually declined. I think people were waiting to see what you said at the investor day. They liked what they heard, especially when it came to the revenue, the annualized growth that you're expecting, 35%. I think most people were looking for closer to 30%. I guess the big question is, what makes you so confident?
Well, first of all, it was a great day yesterday. It's always nice to sometimes take a step back from just, what's happening on a quarterly basis to really talk about long-term strategy. And it has been, as you said, it's been 3 years since we've hosted an analyst day. But what we thought is, there's been so much that's changed in the market just over the last, 12, 18, 24 months that we kind of needed to just take a step back and talk about the company as a whole. And frankly, we're in just an amazing cycle for, technology and specifically around AI. So, back to, the major points, the market is accelerating at a pace that we, just did not understand until, over the last few years. I think we started a couple of years ago, we thought the AI accelerator TAM might be $300 billion, and that sounded like a really big number. And then each year we took it up. And now when we take a step back, we see this massive opportunity, really over $1 trillion overall market as we get through 2030. And it's a place where everybody needs technology. You can think about computing as equating to intelligence. And if you can get more intelligence, why wouldn't you want more computing? And that's kind of the market that we're in. From that standpoint, we're really excited about what we have. It's a product portfolio, it's a set of partnerships, but it's also a vision for where computing is going in the future.
Lisa, they're very bullish on the future, and I have to agree with her. Something which stands out to me there is it's about the vision for where computing is going into the future. Now, if you think about where is computer going into the future, or the way I think about it is computing is going to be the backbone for all these amazing technologies, we're going to be getting in the future. So if you think about healthcare, that's going to be massively disrupted by AI, whether it's gene sequencing, whether it's drug discoveries, whether it's new technologies in healthcare we can't even consider yet. AI is going to be at the heart of that, and compute is ultimately going to be at the heart of that. So if we get successes in drug discovery or in healthcare, which leads to huge market opportunities, they're going to be reinvesting in compute, which of course AMD and other companies are going to be direct beneficiaries of. If you also think about robotics, if you think about autonomy, again, every success each one of these companies has, albeit Tesla or Figure AI, they're going to need more compute. And the more successful their companies are, the more they're going to double down on this technology. And then when you think about general intelligence, again, the more compute equals more intelligence, which means for more functionality. It might be disrupting white-collar jobs, being able to do admin. And that all then circles back down to spending more money on compute. So the interesting thing about AMD is they are a call option on the future of where compute is going.
Makes you so sure of that demand? What do you see that makes you think not only that this demand is going to be big, but that it's real and that it's not going to disappear?
Well, Becky, we spend a lot of time in the ecosystem, and being in this industry for as long as I've been in this industry, over 30 years, I think you see a lot of cycles and you see a lot of technologies take off. The key is what people are saying as they're actually utilizing the technology. So we work with all of the largest hyperscalers in the world, all of the largest enterprises. And if you looked at the AI trajectory over the last couple of years, I think people started with tremendous excitement. ChatGPT came on board. Everyone was like, wow, this is pretty good. And then enterprises started using it, and the early enterprise usage was a little bit slow. I mean, people were kind of just trying to figure out what to do. But if I tell you what we've seen in the last 12 months, every one of our largest customers say, we can see the inflection point now, Lisa. Demand is accelerating because people are now starting to get real productivity out of the AI use cases. And we have all of the largest hyperscalers in the world saying they're investing more in CapEx because they can see the return on the other side of it. So it is something that we always are looking for the signals in the market, but the signals in the market right now say that we're still at the very beginning of the technology, but you're starting to see significant productivity improvements.
Do you really think that they can see the returns on the other side, or do you think there's a little bit of a big gamble going on, which is to say that there's a bunch of them will tell you quite openly, look, I'd much prefer to be ahead than behind. I'm worried that if I don't invest enough now, I won't have enough capacity later, but I can't necessarily fully math out how it's going to work out on the other end either.
Okay, I just want to jump in for a moment there. I think there's two key things which were just mentioned in the last segment. One is the demand equation. Now, if you speak to someone like Jensen Huang, I unfortunately haven't had the chance yet. Maybe you have or haven't as well. But if you listen to someone like Jensen, he says that there is $1 trillion worth of general purpose compute, which is being replaced and needs to be replaced by accelerated compute. So from a demand equation, we have to get through that. Now, if you look at an individual company like Meta, for example, they need to change their core infrastructure from general purpose computing to accelerated computing just to operate. And that's just so they can run their recommendation algorithms, which is a huge amount of CapEx, which is required. Now, companies are being forced to have to invest to protect their underlying revenue. Sometimes you look at charts and it's questioning the return on investment on AI data centers because of AI revenue. But if a company like Meta's core revenue is being tied to AI, that means Meta's entire revenue stack is actually AI revenue. So the other point which was mentioned is whether these companies are gambling on AI. Well, the gamble is to not invest in AI because their entire business model now relies on that technology. Recommendation algorithms, which is something huge for Meta, require GPUs and accelerated computing now to be best at what they do from a recommendation algorithm point of view, and to be the best marketplace for advertisers, for example. Advertisers are getting higher return on ad spend by going to Meta, who's relying on accelerated compute to give them the highest return on ad spend. So it's kind of a gamble if these companies don't do it, because if another company comes in and does that better than Meta, well, then that chips away at Meta's moat. And is Meta going to go to zero in a year's time if that happens? Probably not. But eventually, a company like Meta could be disrupted if they don't shift in this direction.
I don't think it's a big gamble. I think it's the right gamble. And the way I would say it, Aaron, is we can also definitely see that more computing and more investments equate to a faster pace of innovation. I think that's definitely there. I think you can also see all of the pointers to more productivity and more capability. Now, exactly timing of ROI, right, if you're talking about, is it 12 months or 24 months, I think that's where it becomes a little fuzzier. But I would say that, look, our largest customers are extremely disciplined companies, and they have the balance sheets to invest.
An example, the one that everybody talks about is OpenAI.
Yeah.
So OpenAI in 2028 is expecting to lose $74 billion. By the way, they have $13 billion in revenue right now. I believe that's the number. They believe that between 2028 and 2030, that they will all of a sudden become a profitable business. So they have to make a swing from a $74 billion loss. Something magical has to happen in the course of 24 months. So the question I would ask you, as somebody who, by the way, has to think of them to some degree as a customer / creditor of sorts, how you think about that math.
Yeah. So again, Aaron, I would take a step back and say, when you look at the entirety of what the AI technology companies are, you have the largest hyperscalers, you have the AI native leaders like OpenAI, Anthropic, others, and what the underlying foundation is the same. They all need computing. Now, relative to your comment about OpenAI, I think OpenAI is a phenomenal company.
I do too. I use it every second. I love the business. I love what they're trying to do. I'm trying to understand the math.
Let's start with the vision, and then we'll come to the math. When you look at the math, the vision will say you need more computing. That today, computing is a limiting factor in how much people can adopt AI, and you can see that in a number of different places. And so, yes, you have to invest ahead of the curve so that you can get the entire user base on there. But if you just take a look at the growth in users, and not just at OpenAI, but across the entire AI ecosystem, we're seeing that growth. And we're seeing that growth because there is true productivity coming at the other end of it. And from that standpoint, I think we are all, like I said, we're disciplined business people, but we see an incredible opportunity in front of us. And absolutely, if one has the capability to address that with a fantastic balance sheet, you would absolutely do that.
Okay, so I think it would be fair to say that OpenAI is, of course, taking a few risks here. Okay, they're signing some massive checks, despite the fact they're doing, I think it was sort of $15–20 billion in revenue, something like that, and they're signing away to hundreds of billions of dollars worth of spend. Now, why is OpenAI doing that? They're clearly seeing a bet the farm type moment. Okay, and they're seeing that because when they look at, let's say, their own revenues, they're seeing the fact that they are the fastest growing company ever from a revenue point of view. So they're like, right, we've got this amazing win. Let's double down, and they are betting the farm. So I think it's reasonable to say that they are making a big swing here. Now, maybe Lisa feels like she's a bit captured and she can't say something like that, but they are clearly making a big swing. But why are they doing that? They're doing that because they are seeing adoption of AI at an unbelievable rate. I think ChatGPT is at something like 800 million monthly active users now. That's some crazy growth. I think that might be the fastest a company has ever grown in that regard. Then from their revenue point of view, they are the fastest growing company on earth from a revenue perspective. And then when they see what's happening in the world of compute, they're seeing, or what they're seeing in the world of AI is that compute is a key variable. He who has the most compute is able to solve the biggest and hardest problems, which are then likely to yield some of the biggest paydays. So OpenAI is at kind of a bit of a scorch the earth moment where they are thinking, right, we have the balance sheet, we've got the partners, we're at this moment in time, let's go full swing. And I think it would be fair to say in earnest that they are taking a little bit of a risk. Are they forced into spending 6 gigawatts worth of data centers with AMD immediately? I don't know. I don't know how the insides of those deals work. But they're making a big swing because of the indicators they can see in the industry at the moment.
Let's talk about your plans for AI data centers. You are scaling pretty rapidly. You see the growth there in terms of revenue being greater than 80% over the next several years, and potentially getting to have more than a 10% market share in that business over the next few years. To do that, you're going to have to go through NVIDIA because they have more than 90% of the market share right now. What's your plan for doing that?
Well, I would say, once again, this is an amazing market with tremendous growth. And whenever you have a market that is, let's call it, early in the cycle and also on a steep growth curve, it really favors innovation and it favors partnership. From our standpoint, technology roadmap, we're super excited about the new products that we're bringing out. We have, our MI350 series currently in production. We have a big step up with new rack scale architectures coming next year. What we also have is a really strong set of partnerships. Aaron mentioned AI. We have partnerships with Oracle, Meta, all of the large hyperscalers. And the key in this type of market, Becky, is that everybody wants to have multiple solutions. And frankly, there's no one solution that fits all. You can see with different workloads.
I think this is a good moment to stop and address this comment, actually. Also, nobody is lining up for AMD's products, lol. Well, we actually see them featuring in every single one of the top 10 hyperscalers now, okay? And that's before the MI400 has been released. So right now, every single one of the top 10 hyperscalers is lining up for AMD. Now, I'm not saying if AMD is going to take over and dominate NVIDIA, but there is a huge opportunity here for AMD, and I think that's pretty reasonable to see.
You're going to want to have the best technology for each one. We do believe we will have a significant piece of this market. I think between large hyperscalers, enterprises, as well as sovereign nation states that are out there building large data center installations, I think we are an excellent option, and we've talked about some of the key partnerships to do that.
Okay, so AMD last week beat on their revenue and their earnings when they announced their Q3 report. Yesterday, AMD did their analyst presentation, and they made some pretty exciting predictions from a revenue growth point of view, from a data center growth point of view, and from an earnings point of view. And then it's kind of asked the question, so what is the opportunity with AMD? So here's what I think is the opportunity with AMD if we take them from a first principles point of view. Number one, they have a fantastic management team. Lisa Su been CEO, I think, for 11 years now, taking the company from a $2 billion market cap company to what I think is probably close to $400 billion market cap company now. She has a track record of executing. She has a track record of also taking over Intel in the CPU market. This is a team and a company which has been executing to a very high level over the past 10 years. And that management team has a pretty deep bench. And I think if you're looking at a company, one of the most important things you need to look at is their management team. Number two, they are in a growing market. We heard Lisa Su saying momentarily ago that a few years ago they were predicting the data center market to be $300 billion and then $500 billion, now then $600 billion. Now they're predicting towards the end of the decade that being as large as $1 trillion. So if AMD is able to execute well in a reasonable way in a growing market, are they likely to have a growing opportunity ahead of them? And in my opinion, I think yes, they are. And you look at AWS going down a few weeks ago and impacting millions of businesses around the world. I think there's also a forcing function for companies to not want to be 100% reliant on NVIDIA. And when you pair that with AMD having a management team which executes and a growing market, again, there is an opportunity for a significant opportunity here for AMD. And then the comment I mentioned just a moment ago is AMD is already partnering with the top 10 hyperscalers. That's happening right now when AMD has a subpar product, when their software isn't as good as CUDA, and they have all of these companies willing to work with them. When you hear about Lisa Su talking about Meta, they talk about Meta partnering and actually helping them a lot from a software point of view. And the way I kind of vision that is Meta's kind of sat there like, hey, look, we like your products. We don't want to be completely beholden to NVIDIA. We think there's some scope to use you guys more, perhaps more from an inference point of view than a training point of view. AMD is going all in on inferencing. And Meta's going to sit there and think, right, we're actually going to help you and grow with you and partner with you over time. I'm just seeing this comment now. Agreed. We'll still calling AMD. Agreed. We'll see. Still calling AMD advanced money destroyer. So Shervin, are you bearish on AMD? Would you short AMD at this stage now? And I think from my point of view, AMD has, and if you guys got any questions, I'm about to wrap up. If not, I think from this point in time, AMD is not in a position that I personally would want to short. Their business is growing in almost every single vertical at the moment. I think actually every single vertical at the moment. And they have a huge opportunity here with data centers. Is this a company you want to be shorting? I personally would not. And he said no, but you wouldn't be buying it over NVIDIA. Fair play. I think NVIDIA is in an amazing position. I have positions in AMD and NVIDIA. So I'm going to wrap up the video here. I hope you found it of value. I am not... I don't do many lives. So if you enjoyed this kind of format, let me know and I'll do more and gradually make them longer over time and perhaps do a bit more interaction as I get more confident. Thanks very much. Cheers, guys. And if you haven't already, why not consider hitting subscribe? Cheers.